Hello traders, welcome back to TGNFX. We're gonna have a weekly review of CADJPY and gold to study every potential setup that we had this week so far, this past week. I called the moves on my Telegram channel. If you check my Telegram channel, you will see that I took this trade gold on gold. I took this sell. I took the buy that was a loss. I took the sell that was a win, right? I've been calling the moves on my Telegram channel, the CADJPY entry, the COD entry, the EU entry, and GU. So first, make sure to subscribe to my channel to never miss any updates if I post any new videos. And so, without any further ado, let's dive right in. We see on the monthly time frame for CADJPY, we see that the monthly is bullish. Sorry. We see that the monthly is bullish after price. It took this sell side liquidity below this low, then break market structure. We see a retracement to this fair value gap, to this high here, and an old high is a discount PD array. Yes, price it didn't went deeper to discount, but even though the old high, it is a discount PD array, and once we see this rejection here, we know that price it is going to be bullish and we're not going to see any bearish prices to fill maybe this fair value gap, right? Then price has went higher, taking the buy side liquidity above this high, and we have a retracement to the weekly or quarterly, the quarterly BC, and we see a good movement, a good rally up from this quarterly BC higher, making an equal lows. Then this month we see that price has retraced to this price balance range. That price has finding some it's finding some support on that monthly CB, right? I want to see price expand higher from here without any retracement lower. Maybe if price drops lower, fill this monthly BC, it doesn't mean price has changed bias. It just means that price wants more deeper discount prices before going higher. We know that the IF is bullish. We know that this is our next drawing liquidity, this equal highs, and we know this low here, that it took this low as a sell side liquidity and then break market structure higher. This is the invalidation point of that scenario. So if this low is taken, then we could expect price to take this trendline phantom, this consolidation lows, then maybe this trendline phantom here that we have to this order block, or maybe it's just gonna drop lower, or maybe it's just gonna drop to discount, then continue higher at that time. Until this time we're still bullish, and this is our invalidation point. So on the weekly time frame, what we see that we have also this monthly, what is called this monthly CB, monthly balanced price range, and we have also this weekly PC. I was expecting price to find some support on this weekly BC right here. On this weekly BC, and without taking this low here. At this time, I said, okay, if price take this low, there is a higher chance to fill this fair value gap before going higher. Then the next fair value gap, the next monthly BC before going higher. And if we use our Fibonacci level, could say maybe price it is dropping below the equilibrium to go higher if it checks this low, right? Until then, we should be expecting some bullishness from this weekly BC. And that's what happened. I'm going to tell you why this low. Because on the daily time frame, we have this swing low here. That if price takes it, we have this at first. We have this order block, this daily order block. I want to see this daily order block hold price higher, right? If price breaks this low here, that it has already mitigated this order block, because if you see price before going higher, it just went a little bit higher, then drops lower, then it went higher, then this low we have our mitigation here, then it expanded higher. So I want to see this swing low hold price. If it is taken, there is a higher chance that price is gonna drop lower and to fill that weekly BC like I showed you, or this daily BC. It's gonna be the same, right? So what we see here, we see that price this week, Monday, has closed as this contraction candle. I said on my weekly forecast, I said, okay, price it is dropping like this, expanding lower. We are in our area to be buying, but I want to see a confirmation first. I said, I'm going to be a seller, continuing to sell price. Even I am here, I'm not looking for buys until this high is taken. That's what I said on my weekly forecast. I said once price take this high, the Friday's high, we're gonna have a confirmation that price is going higher. So I keep looking for sell entries, taking this low Monday, then Tuesday I looked for a sell entry to check this sell side liquidity here. Then after the close of this Tuesday candle, it closed as a bullish contraction candle, making the low of the week Tuesday. I didn't need to wait for this high to be taken. I just look for an entry here after price take Tuesday's high. So once price at Wednesday price took Tuesday's high, I was looking for bullishness without waiting for price to drop lower. I don't think that I took any entry here. If I check my Telegram channel, I don't think I did check any sell entry because I don't think I found something based on my model. So let's see. Okay, I took only one trade on CADJPY, so it was a buy entry that it ended up a break even. I'm gonna show you it was so close to my 122, then it reverses to my break even. I'm gonna show you why and everything. So yeah, I was looking for sell entries from this fair value gap here. Dutch price Friday has closed like this bearish contraction candle. Then Monday has closed as a contraction candle. I was expecting some bullishness, some expansion, not bullishness. I was expecting some expansion, either higher or lower, but because of the daily time frame I was closing, yeah, I was expecting some bullishness here from this level here, but I need to see a confirmation first. I'm not gonna go and say, okay, I am in this level, okay, let's pick this low here, okay, and try to buy and keep buying and keep buying. Eventually price would check me out, and then check me out once more, then it reverse higher from my level, and I'm gonna be confused. So what I'm doing, I'm going with price until it shows me confirmation that is shifting. Like I said, on Tuesday candle, Tuesday has closed like this as a bullish contraction candle, right? Then Wednesday took Tuesday high just here. This is a confirmation to be bullish. It is a confirmation to continue bullish, filling this fair value gap, then the weekly CB right here with the weekly breaker or mitigation block to continue higher, taking these equal highs, right? Would you say that for the next week, would you expect some retracement from here? Yes, I would. I would expect some retracement, maybe to this daily BC, then continue higher. Maybe that, but I need to see a 4 hour or 1 hour confirmation. If I don't have that 4 hour or 1 hour confirmation, I'm just gonna continue higher. That's for the next video, for the weekly forecast. Right now, we have a weekly review. But for our time frame, what we see? We see price here at this point here. We have what? We have this is Friday structure. Price it went higher, fill this fair value gap right here, right? If we change to blue, it fill this fair value gap right here, then it drops lower breaking market structure. What I was expecting, I was trading this range here. I was using this high to this low, looking for sell entries from optimal trade entry from this 4 hour order block to sell price lower. And that's what happened Monday. It's easy. It's not something bad. As long as price it didn't take this high, I was still bearish. Then price went to this order block and drops lower, taking this low. After this close of this candle here, do you see this big movement, this this expansion higher, this displacement closing above the bodies of these candles? This is a confirmation to be bullish. This is the confirmation. Now we are bullish. And Tuesday candle has closed like this, then Friday took the high. This is a confirmation to be bullish. I don't need to wait for this high to be taken if I found an entry. And there was some entry here, UFD. Maybe it's such premium of your range if you use this range on lower time frame. Maybe you want to enter this one. Maybe you have waited for an entry lower. Me too. That's what I'm gonna do. I could not, maybe I'm not going to enter this trade here, but maybe I'm going to enter this trade here, right here. After it shows confirmation that it is not going to retrace lower, so this is for me a good trade to enter. And I think I found a trade here that I took, right? Then price has continued higher, filling this fair value gap right here. We'd say, okay, what we have here? Price it took this high at this point here. I should be expecting some kind of retracement. And this is what I told you, that you shouldn't do that. You shouldn't do that. You should need to see first some kind of break of market structure, some kind of shift to confirm that price it is retracement. Or otherwise price it is going higher. If we use replay button, okay. Price it took this high here. And if we use the daily here, okay, price it is in this fair value gap. Maybe some ICT traders themselves they do this, and they used to do that a lot. Then I learned the lesson at the hard way. So okay, let's see. We have a break of market structure here, right? There is this fair value gap right here. You would say, okay, I want to be a buyer here at this point to continue higher. That's totally fine. That's great, bro. I mean, we have these levels here. We have this range from this low to this high. That's great. It's not wrong. What I what I want you to do first, look for a confirmation for this sell. Don't just try, okay, because price is dropping lower, because we are in a daily fair value gap, because maybe we took a buy side liquidity above this high, because of churchill so, because of this and this and this, and you go to try to sell, put your stop loss here. Maybe at 15 minutes you will find some kind of entry to put your stop loss above this high. Maybe that, maybe above this high. Who knows? To sell price to this fair value gap, then maybe we would say, okay, price it is now here. I'm gonna look for some kind of buy entry to go higher. That's totally fine as your scenario. Yeah, I would do that too, but I'm not gonna look for a sell. To sell first, I need to see at 1 hour time frame some kind of this. I want to see some highs taken, maybe let's assume this is the high has been taken, but I want to see some kind of break of market structure on 1 hour time frame. When I see something like this, some kind of break of market structure, or maybe this high is taken, then the break of market structure or the failure swing, when I see that, I want to see, then I'm gonna look for an entry, for a sell entry to the discount of this range, to this area. Then after price is here, I want to see something like this to look for a buy entry then to in the direction of the bullish area. Then maybe I'm going to target this highs. If I don't see this here, if I don't see this pattern, some kind of break of market structure, I'm not selling, I am buying, I'm looking for buy. I'm still looking for buys here. If I don't see it, I'm still looking for buys. And this was my invalidation point. To be selling here to confirm the sell to this fair value gap, or maybe to wait for this fair value gap here, I want to see this low to be taken first. Once price take this low, then I'm gonna wait for this fair value gap to enter and wait for my pattern. Until then, I'm still buying. I'm still looking for an entry here at this 4 hour to this fair value gap, right? Let's assume you took a sell somewhere here without any confirmation. Then what? Price check you out. Maybe some profit, then price check you out. Then okay, price it took this high. We are inside this fair value gap right here. We are trying to pick the pick the high, or maybe you are trying now choose you wait for this order block for you, then price check you out. You understand? That's the thing. So here at this point, I try to look for an entry here because we still didn't break market structure below this low. And then once price went higher above this high, my invalidation point has shifted this to this level. Well, if price this retracement take this level, I'm gonna be waiting for this fair value gap to enter a buy entry, or maybe I could find some counter trade. Yes, I could do that. Until then, I'm looking for a buy entry from this fair value gap, right? Yeah. So that's what I want to show you. Don't try to pick the high. Don't try to pick the high, and don't try to pick the high. Because if you are trying to pick the high, you are trying to force the market to choose that high that you want to be the high. And if you are trying to force that, you are telling, and we know that the market is is a place for buyers and sellers to buy and sell their the currencies here, because we are in forex market, right? So you are trying to say, okay, you are a trader, and the sellers, the buyers and the sellers, they need to work for me. I mean, the other traders, they need to work for me. They need to choose this high, like I told you, to be the high. They need to choose that. If I want to force that, I need to force it on other traders. Believe, trying to say, okay, Mr. Trader number one or Mr. Trader X, you need to choose this high to be the high without any reasoning behind it to say why. You are trying to convince them. You are trying also to make this trader work for you, because if you say, okay, you need to pick this high to be the high, you are trying to say, what you are trying to say is, Mr. Trader or Mr. Trader X, you need to work for me, you need to obey me, you need to listen to me, what I'm saying to you, with no question, and pick this high. So we are thinking those traders are working for your best interest. But the reality, we know that everyone is working for his best interest, not for you. So don't try to pick the high. The market is always right. So wait for confirmation to confirm the high. If you want to see some retracement, wait for a break of market structure on lower time frame, ideally 1 hour, to confirm that break of market structure to drop lower. Okay, that's what I want to explain. Here we see that this sell side liquidity is taken, like I told you, then price close above this high. This is a reversal candle, taking the low, taking the high, and also what we have an SMT here. I'm going to show you with the JPY index. You see this low and this low. It is taken JPY index. It never checked the high. It never did. It's an SMT. And you would say, why are you using the JPY currency index and not the future? I'm using both. I'm just now showing you the JPY currency index. And also I use SMT between JPY currency index and JPY future prices. I use that, the SMT between them. And I use the SMT between JPY and CAD, between CAD and JPY. I study everything, but I don't trade everything. That's the key here. Don't trade everything, but you need to, because the correlation, you need to study the correlated market, right? Here we have an SMT, like I showed you here. It never took the high, right? And here it did break market these lows here. It keeps breaking these lows. So it is an SMT between two markets. It is a confirmation to be bullish. We have here a manipulation. So it shows, and JPY has shown a weakness here. The JPY has shown weakness, that price has reverses, right? So on a 1 hour time frame, what we see? We see, like I told you, this is your entry here. If I enter the sell entry, I'm gonna enter here. I didn't trade Monday because I was trying to confirm the bias first. So I want to see, because also we had this move here. I didn't sell. I said I would sell, but I didn't sell because I want to see what's price is going. This placement higher, there's a higher chance it is gonna check this high. So I didn't check to sell, but I'm gonna show you where, if you want to look for a sell entry, how to do that. So I didn't check the sell, and it was outside New York kill zone. It was at London close, so I didn't bother to enter, as I don't trade Monday anyway. Then Tuesday price chose this price action here, went higher. I was waiting at this point here. I was waiting for price to drop lower to this fair value gap, but I need to wait for a fair value, for a break of market structure. It never did. It continued higher. It break this high here, and like I told you, I was waiting for what? I was waiting for this low to be taken if I want to to enter this fair value gap. So I use this range. If you see this low here, because I did check an entry here, let me show. I did check an entry here. This is the low, this is the high, right? Price has retraced to optometric entry, then it went higher, giving you a good buy entry below this equal lows here on lower time frame, and the 4 hour and the 4 hour fair value gap with what? With the 4 hour breaker. So it's obvious that's a good area to buy. It's we have a 4 hour breaker, we have a 4 hour fair value gap, we have this range from this low to this high. Price has retraced to discount, and price has taken equal lows also on lower time frame. So I don't see, with all of these confluences, it was a higher probability to buy here, and I did took a buy entry here. I'm going to show you on 15-minute time frame, and then you would see that price just continue higher like this from this fair value gap and expanded higher, and prices also has retraced to discount of this range here. Optometric entry, and boom, right? So let me clear my chart first to show you that we have here a breaker. So remember that could do something like this. So this is a breaker. We could name it as a breaker. So it's a bullish breaker. Right? And we have some equal lows, and we have also, if we use this range, I could show you this is the low of the range of 1 hour time frame, and this is the high of the range. So let's leave let's leave that here, and let's see the sell that I told you here first. On 15-minute time frame, what we see? I see that price has retraced to our 1 hour bearish order block, to our 1 hour bearish order block right here, and this level at New York. Then at discount, if we talk about the daily template, we see that Asian range has been a consolidation. Then price has dropped lower, making the low of the day at New York kill zone, New York session. Then price has expanded higher to our premium range. If we use this high to this low, price has expanded higher. So what we expect for London close? We expect two things. We expect either a reversal if price is bearish, or a consolidation closing the day. If price keeps closing, consolidation closing the day, we're going to continue higher for sure to check this. If London close has reversed, we're going to continue lower to drop lower. Once I see that the London close has reversed, I was looking for an entry here. At this point, that I didn't enter at this fair value gap here because I was waiting for London kill zone. It's not, this is not a valid entry. It is because this is CADJPY and Asian range move a lot for Asian pairs because we have GPY is Asian pair. Asian currency, what I want to say. So Asian range is also a kill zone to trade. I didn't trade it. I did miss this trade because I was sleeping at that time. I just woke up. I was waiting for a London kill zone. That's it. When I was waiting for a London kill zone, I waited for this entry here. For this fair value gap right here, that I missed it by these pips. I didn't chase price. I would say, okay, drop to 5 minute. Yeah, I did drop to 5 minute time frame for a backchase entry because I did miss this entry and I found if I enter this one, that's good for to journal it, right? So I didn't look for an entry here. If you enter at London key zone, this is your entry. Let's see, okay, what happened? Price it took these highs here. You have a break of market structure right here. You have your breaker here, and you have your fair value gap, inverted fair value gap, if you wanted to call it inverted fair value gap. You can enter here, you can enter at this fair value gap just right here. Choose your entry, choose your model. I'm showing you all possible scenarios. You can enter at this price balance range. Maybe price wouldn't get to that. You can enter to this breaker and breaker gonna fill you. Maybe this fair value gap, but the stop loss. Where you're gonna put your stop loss? The stop loss is here. If you enter that breaker, it doesn't matter to have a bigger stop loss. It doesn't matter, bro. It doesn't matter. It doesn't matter to have a bigger stop loss. What matter is to put your stop loss in a logical place. I'm not gonna push my stop loss here thinking, oh, okay, price is here, so let's push my stop loss here based on this range, price check you out, then drop lower. Or maybe let's push your stop loss above the breaker, price could check you out and this drop lower because we still have a fair value gap just above here that price could fill. We don't know, but I know for sure that price shouldn't check this high. If it did check this high, price is not reversing, price it is continue higher to check this highs here, this consolidation. So I'm gonna enter here, and where is my target? My target is this low, the New York low. So it would give you 4.49 R. If you enter at this breaker or this price balance range, you're gonna have a bigger R. But for me, this is enough. As long I'm, that I target only 1 to 2. So this is my target. Here at this point here, like I showed you, that I was waiting for this entry to sell after price. It chose a, it chose that price. It took a buy side liquidity above this high here during Asian range, if you see, then break market structure lower below these lows. I didn't enter here as we have this mitigation block and also a 15-minute fair value gap, right? Then price it broke market structure here. At this point here, I was waiting for this fair value gap, but I should have entered here. Yes, I should have. At this fair value gap right here. This should be my entry. And wait for fair value gap, and my stop loss should be there. Or maybe, when I wanted to enter there, I used optimal trade entry, and because my optimal trade entry has helped me a lot to choose the fair value gaps and order block. That's why I didn't enter. But I did put on my journal just to see how many times this happens. If this happens a lot of time and I missed it a lot, why not to enter here with a bigger stop loss? if this happens a lot of time, I'm gonna interpret the data that I'm gonna collect. But until then, I'm still entering an option with entry because it has a good risk reward always. Or maybe you miss the trade and you see this fair value gap right here. Let's assume that you entered at this fair value gap right here. Where is your stop loss? Is your stop loss this high? Maybe, but for me, my stop loss is this high because it still has a higher chance to to go to this level here, then drop slower. I'm not trying to have a small R by reducing the stop loss. I'm trying to push my stop loss in a logical place where the idea of bear scenario gonna be you know where I'm gonna change my bias. It's gonna be wrong. So then price has dropped lower here to our levels, then it shifts back at this point here, showing you the entry. Okay, like I told you, at 15 minute, at 1 hour time frame, we talked about we talked about how price has retraced to optimal trade entry, how price was bullish at that day, and how price has retraced to optimal trade entry, right? This is 0.62 level. It is also an optimal trade entry. I use these two levels, and because 0.62 level it's close to price, I enter many times at this level, more than this. I prefer to have a bigger stop loss at enter than to have a small stop loss at not enter. Then what we see? We see this consolidation here, and we see this fair value gap right here. If we use our if we use our range, our agent range, we see that agent range it is expanding. The price has opened here, it didn't drop slower to check this low, make the low of the day, but it expand higher. Then price at London price has continue higher. So I am using this range as a daily template. I see that Asian range expanding, London is expanding. I'm looking for a New York optimal trade entry, then a continuation high. That's why I took a buy entry just here with stop loss here. No, no, not here. Okay, okay. I took a buy entry here. Once price drops lower, I didn't took a buy entry here. I waited for a confirmation, right? On a lower time frame. So I dropped to 3 minute time frame. This is what 5 minute time frame first, and I have this fair value gap right here. I remember now. Just to show you on my Telegram channel, it was this. No, okay. I'm trying to look for it. Yeah, it was this trade here. Yes, this one. Price took the lows at this fair value gap. I entered here. I entered here. A little of slippage. Above. It feed me above the fair value gap. It feed me in above the fair value gap, right? So I took a buy entry here, like I showed you, with stop loss here. But to the shift, it was a 3 minute time frame. You see, the price has get to our level here, then it break market structure above this high. I had to confirm this buy entry. It's because this displacement here, after checking this high, there's a higher chance that it is gonna just continue lower to check this low and enter this fair value gap. So I waited for a shift in marketplace to say to look for buy entries. Then I entered there. I targeted 122, and you would see that price was so close to give me my 122. I have some some traders and my Telegram channel who entered with me here, but they took their partials as their risk management model tell them. My risk management tell me always enter target 122 with no partial, just enter and leave it there. Close the chart, don't look. Right? That's what I did. But I did another human error. Why I'm using 122 because it make me reduce any human errors from me. Not for the market because I am a human. I could make a lot of errors because of my psychology, but 122 make me have less errors. Right? So the thing is price was here. I I I checked the chart. I see the price was here, so I moved my stop loss to break even and closed the chart. Then I found that that price has dropped lower, taking me at break even, then continue higher. If you see that 122 has went higher to give me my entry. If I didn't close it, I would have 122. But this was an error from me. I closed it because I thought it was so close here. I told myself, okay, there is no need for price to retrace to break even. Then I went, then I closed the chart. That's good, even if it take me out at break even, I did already accept that. If price retraces to take me out on break even, I have already accepted that, so I don't care if I got out from a winning trade. Then price has continued bullish, and you see that price during Asian range, price has retraced. Friday, this is Friday, price has retraced to optimal trade the entry, and this was a confirmation. This was the confirmation. Price closing above this, and also this reversal candle, this 1 hour candle, it took this low, took this high, confirming the reversal from optimal and the entry, and the entry was here. If you entered, this is where I'm gonna enter, and you will see at 15-minute time frame what we see. We see price retrace to this level, right? And we could use this second fair value gap here. Then we see it closes above these candles here, and at 5-minute time frame we're going to have a swing high. Of course, that price has taken. This is the swing high. Where I'm going to enter next, I'm sure that if I enter at this level, I'm going to use again Fibonacci level, and I have option trade entry here, so I'm going to use this fair value gap right here. I'm going to enter an entry here with stop loss here. If price checking me out here, it doesn't mean that the bias has shifted. It just means I'm gonna wait for more information if price is gonna find another entry to go higher, or maybe price has shifted, or maybe you wouldn't be comfortable to buy here at this optimal trade entry after break of market structure. What then what you could do? You could wait for this height to be taken as a confirmation, and you see that we had an EUPD right here. This should be your entry. This one. I entered this kind of trades, like this EUPD with stop loss here and targets higher, because how the 1 hour time frame has closed. If you see the 1 hour candle here at this point has closed as price taking the low of below this low, then close above this high as a reversal candle. So the next candle you should enter at the open, right? With stop loss below it here, or maybe you're gonna if you waited for a good retracement, that's fine, but you're gonna miss this trade, and if you miss this trade, that's fine also. So I'm telling you, it's not personal that if you miss a trade, it's just business. If you hear a lot of this say, they always we have always learned from movies, it's not personal. It's a business. Also here in the market, it's not personal if you miss the trade. It's not personal if they check you out. It's not personal if price was so close to your TP then reverses. It's not personal. We shouldn't have this emotion. It's just business. We are doing business, right? So then price has went higher as a confirmation. So if you enter here, I always close the at 122. But if you hold it to your level, to the weekly level, it's 15R. For me, 15R is not that realistic. Yeah, you could do a 15R, but you should know with a bigger R, with a bigger risk reward, it's always you're gonna have a smaller win rate. So if you are fine to have this smaller win rate, if you are fine to take a lot of losses, then have a one win that's gonna get you to break even and more, give you more money. That's fine. That's your psychology. That's your personality. You can do that. For me, I tried that. I tried it a lot, but I've seen that I prefer to have a 1 to 2 that is consistent with a good win rate. As 50% win rate, you still be a winner. If you have 10 trades and if you lose 5 and win 5, you're still gonna be a winner. So why I'm gonna have this bigger R to to make me feel this, to have these emotions, like say okay, maybe price is here, then it's gonna reverse, or sometime a lot of, and then you're gonna make a lot of human errors. Take okay, maybe I'm gonna close it here, and once you close it, you made money, and you're gonna say, oh, I didn't wait for price to my level, I did predicted my level, why did I close it? Then the next trade you're not gonna close it, or no, you're not gonna check partial, then price take you out. A lot of human errors. So I found out, just if I target 1 to 2 and I'm gonna be consistent with it, with a good win rate, I'm gonna be profitable. You should remember that we are looking for consistency. We are not looking for one trade to get us rich very quickly. We're just trying to look for a consistent trades that is gonna help us to enrich ourselves in the long term, not the short term, right? So this is for CADJPY. For gold, okay, let's see gold now. This was my trades. I didn't check this trade here because it is Friday. I have already made money. I have already get my target for the week. So I didn't need to enter another trade and risk what I made to lose and lose what I made. So here, if we get back from the weekly time frame, what we see that price has retraced to the optimal trade entry right here, and I'm expecting bullishness from this weekly BC to fill at least this weekly CB, right? Then a continuation higher to check this high, right? But first target is this weekly CB. On a daily time frame, what we see price, it it feel that weekly that weekly BC optimal trade entry, and we see a break of market structure confirming the shift, right? Then we have our break of market structure on a 4-hour time frame. There is no need to show you that. Maybe you can find it on your own. But in this week, we see that price Monday has retraced to this fair value gap right here, then expanded higher to our weekly CB. Then we have some kind of a reversal, and now we have this low here. If this low is taken, I could expect some kind of this range here, that price could just drop lower to optimal trade entry, to this order blocks here, to this fair value gap here, to this volume imbalance between this close and this open. We have a volume imbalance there, right? Yes, I could expect that, but until then, I'm expecting price to find some support on this range here, from this low to this high, then continuation higher. Like I said, why I'm gonna pick this to be the high, why I'm gonna do that. On 4-hour time frame, what we see price, we have this weekly BC, the daily BC, we see price has retraced to optimal trade entry, At Monday, price has retraced to option market entry, and we had what? Whether an accumulation just prior to the week. This is power of three. We have an accumulation, manipulation making the low of the week, then an expansion higher, closing the having the high of the week here, right? Then we see some continue some what is called some retracement to this low, to this daily BC inside, to the discount of this range here. Now price is at option market entry. That's why we see this small ranges now, and this for our order block, right? But first, if I am bearish, if I want to be bullish from here, I need to see this high broken. This for our high or 1 hour time frame. I want to see this high here, right here, this one here. I want to see it broken. I want to see something like this. See price check this high, then continuation higher. But until then, I'm not trying to pick this to be the low. I'm trying to look for a continuation lower, maybe to below this equal lows here, below this a little consolidation here, then maybe check this low here. And if it did, we have this fair value gap here, we have this trend line phantom here, we have many things, to target lower. So yeah, so at this point here on the daily time frame here, I was waiting for an entry here. When I see that the Monday has dropped lower, expanded higher above this high, I was expecting Tuesday to be an expansion. I wasn't expecting Tuesday to be the low of the week, or to check Monday's low before going higher. I was expecting a Tuesday to be an expansion, because Monday has been expanded higher after taking these lows here, then broke above the high, so it is a confirmation to go higher. But then I wanted to sell price below these equal lows right here. If we see we have some equal lows here, I'm going to show you a 15-minute time frame, it's better. We have these equal lows here, this consolidation, touch price was here, but first, and we have also this fair value gap right here. I waited for which scenario I'm gonna look for. Am I gonna look for buy entries from here and then continue higher, or I'm gonna wait for price to drop, taking this low, filling this fair value gap here, or maybe this order block here? That's what I was waiting for at the opening of this day. I said on my Telegram channel when it was here, this way we have this level, but I want to see some kind of price take this lows here, then a continuation higher, right? Something like that. That's what I said. But once price has filled this fair value gap and it broke market structure on 5-minute time frame, if you see, it filled this level, then it broke market structure here. At this point here, I was no longer waiting for this low to be taken. I just looked for an entry here. I didn't enter because it's not a higher probability trade. It's just because I wasn't available at the market at that time. I had some emergencies to do, so I didn't enter. So, but this is a good entry at London with stop loss here, targeting 122 again. Is it 122? But the target is the weekly CB. And if you target the weekly CB, this is the weekly CB, right? This level, it's 7R, 7.6R. This is the first entry. Then what? Then you see maybe you didn't enter here, and you see something like this. You still wanted to have another confirmation. You see this price, it took this low here, then break market structure above this high. So this is a good entry to enter here at this fair value gap right here. Yeah, it is outside London kill zone, but it doesn't mean it is wrong, because this setup has been formed in London kill zone. You could enter here with a stop loss here because it took this level and target 122. Or maybe you'd say, okay, I'm gonna enter here, but my stop loss I'm gonna put it here. because maybe price is gonna still drop lower. I didn't enter at London kill zone, so maybe we're gonna see that, and you still see that your 122 has been hit, right? Then what we see here, we see price has went higher, giving you 122, then price has reverses, taking this low. Once price has reversed, taking this low, I didn't say now we are bearish. No, we're still inside this bigger fair value gap right here. If I want to be bearish, once price has retraced, I want to see this low broken first. So if this low is taken, then I could say, okay, price, it is going to be bearish, taking this equal lows right here, and to this 15 minutes order block right here that it took these lows. When I see some mitigation, maybe to continue higher, maybe. But I want to see this low here first broken. Until then, I'm still bullish, but I'm not gonna enter at that fair value gap because of that movement, because of this drop here. The price has went higher, then it drops. I'm not gonna enter. Then it went higher again, and you would say maybe I did find an entry, so I'm gonna move my stop loss here. So price took you out. If you were targeting 122, if you were targeting 122, you have already taken your profit. Then I see price do something like this, went higher like this, then break market structure above these highs. So I'm gonna now be again bullish, and this is my entry. If I use option method entry, but first I'm gonna enter here at the fair value gap 122 again. Maybe you didn't enter at this fair value gap, you weren't so sure that price is gonna go higher after taking this low and break market structure. And once price is here, you're gonna drop to 3-minute time frame, then and look for the same pattern. And what you're gonna see is you're gonna see price drops lower, taking this low, then closes above these body's candles, and we have now this fair value gap right here. This is a good confirmation to enter. The stop loss here, or maybe if you wanted to put your stop loss here, that's fine. And target 122 once again, and you have 122. I don't say enter every trade. Maybe choose one in London, then one in New York, or maybe choose two, or maybe split the risk on them. I'm just saying this is all the potential trades that happen during the day that you could take at least one of them and make 2% per day, or maybe 3% per day if you're risking 1 to 3, and that's more than enough, right? This was the entries for gold during Tuesday. Okay, right? On 1 hour time frame here, what we see, price has went higher, like I told you. Then what we see price has retraced lower a little bit. If we use 4 hour range, which may use this level here and line, and you see we have this 4 hour fair value gap right here. Do you see it? Price has dropped lower during what? Wednesday, has consolidated, then drops lower to fill that 4 hour BC, this one, then break market structure above this 4 hour BC, and fill the weekly CB. We say, okay, now we are at weekly CB. It is obvious to keep selling. What I told you before, I don't pick the high. I don't pick the high because if you do that many times, most of the times, price will check you out, then drops lower. Most of the time, you still don't have a confirmation to sell yet. Why would you choose this to be the high? Why isn't it the CE? The 50% of the weekly CB. Why isn't it that price could fill completely the CB then drops lower? Why that? So why would you choose this to be the high? So give me a reason and why. So if I want to choose this to be the high, I wanted to see this low first to be taken. Otherwise, I'm still bullish. That's why I took this buy entry. And if you see on 1 hour time frame here, we'd see, okay, we have this low, We have this high, we see some retracement to optimal trade entry, that's good, and we see some reaction from that optimal trade entry. That's a confirmation. On 15-minute time frame, what we see? We see that price has dropped lower, filling this fair value gap. So price, it took this low, break market structure above this low. So at London, I took a buy entry here with stop loss here, targeting 122, but I'm targeting this high, but I'm gonna close the trade at 122. Then price give me an entry, some reaction from my entry, then it took me out. Did I say, oh, why I entered here? It's obvious it is at weekly CB, price is just gonna revert. No, I didn't say that. What I said, that's a higher probability for me to go higher, so it was a loss, and now we took this low here taken, so it is a confirmation now to drop lower, and I did say that. This one here, once price took this low, I said either we're gonna have a retracement to sell, I want to see a retracement to premium to enter a sell position, or maybe price could just continue lower to this daily CB. Yes. Yeah, this is the entry that I said price has retraced the optimal trade entry for 1 hour range area for longs. So that's what I was looking for at the time. At the time. And once price took me out, I shifted my bias. As I know for sure, we are at premium of the higher time frame. I know that price is just moving in from a premium weekly level. And also I know I have my confirmation that price is bearish. So I'm gonna sell to this area here. And price, I choose my option method entry here, this low here, right? With the breaker, where did I enter? Okay, I had my entry there. Let me get rid of this. Or maybe with the breaker here, with this fair value gap here at that 5 minute time frame, I have something, yeah, just option method entry. Maybe I entered here, it just was the slippage that got me there. But I entered at this level here, and I targeted what? 122. That was my target, 122. So two, so I have 2% here secured. So I had a loss minus 2%. So overall it's 1%. And then the next day has continued lower, and we see that price has dropped lower here, making market structure below this low. So I use an option trade entry from this high to this low. You see that price has retraced to the option entry, my entry, stop loss here, and I target 122, and price it did that, giving me 122, feeling completely the daily BC, right? But I didn't enter this trade. I didn't. This trade, I did call it here, if you see, right here, once price was here, I did call it, but I didn't enter it because I know my risk management model. I am a disciplined person. I did took my money here. I made my money for the week, my target, so I'm not adding another trade. I use this to, I did post this just to journal it and see that price, and that price could give you entries on Friday. Let's assume that I did enter this one, that I still didn't make my target, and I did enter this one. If I entered as Friday, I'm not risking 1%, or I'm not risking what I usually risk. It's gonna be a low risk entry because I know at Friday, even we could see some movement, even we could see some reversal. I know for sure at Friday there is a higher chance to close the week as a consolidation, or maybe price could take anyone that who tried to hold price here, selling to go higher, right? And that's what we had. Thank you for watching. Till the next one, till the next time, please study more and practice more. And if you have any question, please put it in the comment section. I'm gonna for sure answer it in the next video. And thank you.